Commissioner Stevens, the report that was issued to Congress on modernizing the housing finance stated the goal of reducing the market share of FHA from historic high levels to a more normal level in the future. However, at the same time, I've been hearing about discussions of the qualified residential mortgage among the regulators involving creating a very narrow QRM, such as perhaps mandating 20% down payment requirement. Wouldn't a narrow QRM coupled with winding down of Fannie Mae and Freddie Mac exclude many qualified and worthy borrowers, but also drive them to FHA rather than into the private sector?
Yes, thank you for that question, Madam Chairman. So there's two components here. As it relates to QRM, we're one of the regulators that are involved in this rulemaking process. And so to some degree, I'm a bit limited in what we can discuss related specifically to what may come out there. But I would say this. You know, experience that has been proven itself over the decades in this housing system is that FHA traditionally has always played a much smaller role in the housing market, driven mostly by curtailments around loan limits, as well as a robust competitive market that was functioning well. We don't have the robust competitive market functioning well, and we have loan limits that clearly cover a much larger section of the market than what FHA was ever intended to do. I remember buying my first home with an FHA mortgage, and I paid 3.8% mortgage insurance premium on my home, which is much higher than we charge today. And the loan limits were far lower in terms of what we were able to qualify for. And FHA played a very important role in the housing market. So as we go forward, whatever comes out with what the QRM, Qualified Residential Mortgage Guidelines are, and as we work to try to find avenues for private capital to re-engage, there are measures within the FHA that can control that volume in a responsible way so that it remains targeted towards the purpose it was served. Loan limits are one. Mortgage insurance premiums are clearly another, and product guidelines are a third. And I think those are the three primary methods that would ultimately be used, again, over time as we carefully test and transition to a more normalized market where private capital is re-engaging.
Right. Then, you know, the white paper also talks about the phasing down Freddie and Fannie, and there's some angst about how could private investors be encouraged to increase investments in both the single family and the multi-family housing if there's no guarantee. What mortgage metrics could help investors gain confidence in investing in private mortgage-backed securities that don't have a government guarantee? Is that possible?
Yeah, I think that is really the crux of what the white paper is meant to tease out from a debate standpoint. And that's why when we presented the three options, we clearly eliminated a couple of additional options that we debated and excluded. One was a no guarantee system, and one was a much larger guarantee system. We recognize that there would be a guarantee literally in all three of those options, at minimum for FHA and for underserved families. But I have been through cycles in markets before, and I've seen private capital exit and return. They've done so under various terms. Some of those terms have to come with stabilized home price. As home prices continue to decline, it creates trepidation from private investors to come into that market. And the second has to be that return on investment, that their credit risk has to be priced appropriately for private capital to engage. I think the white paper is very careful in that regard in spelling out that, well, we need to wind down Fannie Mae and Freddie Mac. This is a multi-year process that has to be done very carefully, this idea of transition. And as we transition and we begin to take the first steps, we will see and we will have test points to see how private capital re-engages. But I want to be clear. I am confident, having been in these cycles before, never to this extreme, but I've been in these cycles when private capital exited markets, that capital returns when they believe that the investments are safer, sounder, and more secure, and at the return rates that are needed to make sound investments. And that's what we will have to test as we engage with policy and look to see signs that that market is returning.
Then, isn't one of the lessons that we've learned from the crisis that it may not be feasible for everyone to own a home at this time, and some may be better positioned to rent? And in your testimony on page 2, you mentioned that the administration will be looking for reforms that balance the impacts on low and moderate income families as you consider further FHA reform. Can you describe what that balance would look like?
Yeah, and I think that is absolutely critical. I mean, everybody has to recognize that not everybody should have owned a home in this past period. We created a bubble based on stated income, 100% financing, exploding loans that ultimately damaged the wealth and credit histories of those families who took out those programs in search of perhaps more instant wealth in that process. That was irresponsible. So Secretary Donovan, this administration has been very clear that we need a much more balanced housing policy. And you can't have a balanced housing policy without a specific focus on rental housing. And so in the white paper, we talk about it. And this is a dialogue we look forward to engaging with members of Congress on going forward. But we talk about making sure that there's safe, affordable, accessible housing, and there's explicit focus on making sure that there is liquidity behind that market. And that could come with a couple of suggestions we have in the white paper. One is looking at smaller rental properties. Today, looking at multifamily properties in the 50-unit range is difficult to find financing for, particularly in many urban markets where there's older multifamily housing stock. That's one area that we're talking about looking into. The other is making sure that there's rental housing in rural markets where traditionally the multifamily investment market and rental investment market hasn't really concentrated. This is an area we think needs to be looked at as we look at balancing the ownership, rental, markets to make sure America is well housed generally, whether they own or rent.
Great. Thank you. My time has expired. Mr. Sherman.